We're 2.5 hours into trading. It is Tuesday, September 28th. Hello, traders. We've got quite a big market sell-off, and we've got more selling to come right now. I'll tell you about the 1OP indicator, bearish cross right here. Compression after a big run up in 1OP. That is a bearish divergence. Looking for a new low in here. I am currently short the market. Let's go into my pick from Sunday night. That's right. I haven't done a Sunday night video in a very long time. Went through all the charts, took a look, found a nice stock. I liked Tesla. We got to go into that daily chart, then we'll take a look at the 5-minute chart. Love this strong upward sloping trend line. Love the breakout on Friday to a new high. Long green candle, that is a bullish engulfing candle. You can see the prior day right there, little doji. So I was expecting some nice, strong price action on Monday. Take a look at that 5-minute chart. Let's see what the stock did yesterday. Oh, yeah. If you bought this stock on the open, right there, you did very, very well on Tesla. What do I see for Tesla today? Well, the market's down a lot. So the stock has been making a series of lower highs, but you can see how the market has been drifting lower, but Tesla has been able to preserve the low of the day. This tells me that it has some relative strength. Would I go out and buy Tesla right now? No, not unless I think the market's going to rally, and I don't think the market's going to rally. Market first, market first, market first. So I'm going to go into the daily chart, and I'm going to show you some of the clues that I've been referencing. I'd mentioned Sunday night, which was right in here. That was Friday's price action. So coming into the week, I like the fact that we had a couple of nice long green candles. The S&P 500 was able to rally above the 50-day moving average. That also was good that it was able to close above that level on Friday. You can see here that yesterday, excuse me, that's Friday right there. Yesterday we closed just below it. That was a little bit of a bearish sign because in previous bounces, what we've seen is 1, 2, 3 days down, and then a week, 2 weeks, 3 weeks worth of nice bullish price action. Get our little retest here, find support at the 50-day, get a nice little rally, and then follow through for 2 or 3 weeks. Same thing in here. We didn't get that here, but this was the big clue. Right in here, we saw sustained market selling that we haven't seen in a year. This told me that this price pressure was greater than what we've seen here. Couple days down, bounce, couple days down, bounce. This is about 2 weeks worth of selling pressure, and I suspected that this upward sloping trend line right here was going to be violated, but Sunday night, I didn't know for sure. Are we going to get a couple more days of bounce out of this? That 50-day moving average holding, this downward sloping trend line could have been breached to the upside. That would spark a little bit more buying. Sunday night, didn't know, so that's why I favored Tesla. I thought, this stock's got fantastic relative strength. Even in a flat market, it should continue to push higher. So now we can see overnight we had a big gap down. There's your upward sloping trend line. This is a bearish flag formation. I've also been mentioning in my comments that we were going to see a retest of this low. What happens right here? Critical, critical, critical. Why? Why is this such a critical point? Because we have this retest. There are a couple of different scenarios that can unfold right here. We can get a bounce off of that 100-day moving average and another bounce. We're right on it. We're going to be testing it today. That would be a higher low double bottom. Low, higher low. Off of that 100-day moving average, continue to draw your downward sloping trend line. Might as well drop that right now. We'll click on that candle right there. We're going to click on this candle right here. Now we've got our downward sloping trend line. So if we get a double bottom higher low and a nice rally up through this downward sloping trend line, probably take a few more days to test that bid, make sure that buyers are still there. But eventually, if we get that breakout to the upside, that could fuel a nice little year-end rally. It may take us a few weeks to see that happen. On the other hand, there's another formation that we have to be very aware of. And right now, we have a bearish flag. So what happens on this dip? What do most people do on dips? Well, in the last year, if you waited for the dip and you bought on that support, you did well. Dip, buy, excellent. Dip, buy, excellent. It has worked like magic. Dip, buy, uh-oh. All of these buyers are getting flushed out in a big way today. That selling pressure is going to perhaps spark additional selling. We crack that 100-day moving average and we keep moving lower. That's why this is so critical right now. Market first, market first, market first. Yes, you could come in, buy this dip, but you wanted to only have very short-term overnight positions, if any at all, and that's what I've been suggesting. Stick with day trading. Very low probability market right up in here. Wait for these big dips, wait for that support to be confirmed. We're still waiting for that confirmation. We get this next leg down, that could be very, very ugly. Mind you, forward PE on the S&P 500 has not been this high since the tech bubble in the year 2000. So stock valuations are very lofty right now. So we've got this 100-day moving average in striking distance today. We need to see what's going to happen there. Are buyers going to step in? Are they going to defend it? Or are we going to get that next leg lower? If we get that next leg lower, we could possibly test the 200-day moving average. So let's put that up. That would be the next major support level at 415. 415, our high was just around 450. That's going to be actually 455. It's going to be pretty close to a 10% correction down to that 200-day moving average. What are the warning signs out there? What do we need to be aware of? First of all, if we take out that 100-day moving average on the first shot with a vengeance, that's not going to be a good sign for us, because it will show me that buyers are throwing in the towel, feeling that they are going to be able to buy at much better prices. Now, if the market just came down herky jerky, herky jerky, herky jerky, trying to get to the 100-day moving average, it tests it intraday, closes on the high of the day and above the 100-day moving average, that would tell me that buyers are defending that support level and that we are likely to see that higher low double bottom, but it'll probably take a week or two to unfold, and then we could see a nice rally after that. But a long red candle, if this holds for the day and we are on that 100-day moving average and we test it all at once in one day, that to me would be a bearish sign and a sign that we could see follow through selling. So watch today's price action. Super, super important. So let's also take a look at a couple of other things that we've got in play right now. Let's take a look at TLT. This is the US 20-year bond, and you can see that we had a nice firm resistance level there, and we had horizontal support here. We have the 200-day and the 100-day moving average converging here at 145. Today, we broke below that. Upward sloping trend line, breach to the downside. Zoom out, take a longer term look at it. There you can see. Not good. That means that interest rates are heading higher. That's going to pressure tech stocks in particular. It's going to pressure the overall market. We know that the Fed has been talking about tapering probably early next year. Market's not going to like that because it's addicted to easy money, and the punch bowl could be pulled away. So those are all negative influences that we have working. Let's also take a look at China. FXI I've been referencing. You can see how their market has been trounced since the high back in early March. And now it is in bear market territory. Why is it in bear market territory? This is the second largest economy in the world. This has been the global growth engine. This is not a good sign. Yes, we also have some credit concerns starting to surface in China. That's a problem. Debt ceiling, politicians are going to drag their feet like they always do. They'll get something signed at the final minute. But yes, that has to be signed by the end of the week, or it's going to put additional pressure on politicians. The market has a way of sending a signal to politicians, and right now it's telling them, guys, you better get your act together. We do not like what we see, and that usually motivates them as well. So we've got FXI, super weak. China, second largest economy in the world, super weak. Credit concerns possible. TLT starting to roll over. Fed likely to not raise interest rates, but likely to start tapering in 2022, and they are likely to conclude that taper in 6 months. So they're looking by May next year that the tapering will be done, their asset purchases will be done. That is a form of tightening. Nobody wants to say that it is, but in essence, it is not the easy money policy that we've seen. So what do we got going on the S&P right now? We have it trying to bounce off of this support level right here. We've got the 1OP indicator still spiking. We need to see it roll over, and we need to take out that low of the day, and then we should continue to drift lower. Here are the tells that suggested to me that the market was going to be in trouble. Here's how I traded it. In my pre-open market comments, I'd mentioned everyone the worst formation that we could see this morning from a day trading standpoint is a gap and go formation to the downside, because it's been very difficult to short the market. Every short has been met with buying. Shorts have had their head handed to them in the last year, so they're going to be super cautious, as I would be super cautious. So I would not want to short on a gap and go formation. But you can see long red candles stacked one on top of the other. That was our sign that this trend strength is very strong. So I waited for a bounce in here. We had the 1OP indicator back in here, crossing to the bullish side, tails under body. Okay, everything looks pretty good in here. This could be our little bounce that we're able to short. So now I'm going to wait for signs of weakness. And in here, I could see that we were starting to get into the halfway point of that long green candle. So I did try a short in here, took some profits on it. I am still short right now too. So what I made on this part of the move, I'm giving back right now. But I do still believe that the market is going to continue to drift lower. I believe that that 100-day moving average is in striking distance today. So as we get down and test that, that's where I'll be looking to take profits on my short. So what can I find for a short of the day? Well, first of all, let's take a look at a major index, QQQ. We know that the 5 largest companies, Microsoft, Facebook, Google, Amazon, Apple, are all in the QQQ. The QQQ is also a little bit more sensitive to interest rates. So that is what we're going to take a look at. Here you have your bearish flag formation, and you can see how that was the low from last week, and we've actually tested that low and taken that low out. Plus we have some additional, that was an alert that I had set on IRNT. Yeah, let's take a quick look at that, show you how that works. A downward sloping trend line, and I had some horizontal resistance levels. Stock is able to get through, so that's been a very hot stock. We may get a few more alerts while I'm doing this because I've got a lot of them set, but I want to continue with QQQ and why that's an attractive short. Then we'll drill down and take a look at a couple of stocks in the QQQ that I think will be decent shorts as well. You can see that it's found support here. It's starting to bounce off of that support, but on the daily chart, we can see that it's weak relative to the S&P 500. We've got a nice horizontal support level that was tested right here earlier today. I believe that it is going to test that 100-day moving average. If the S&P 500 continues to show weakness and it blows through the 100-day moving average, QQQ will also blow through its 100-day moving average. Within the QQQ, we're able to find some stocks that actually look very good for shorting. I'm just going to go into my heavy selling list. Facebook is one that I highlighted last week. Here you can see it actually made a new low for the day and a new low relative to last week's low. So relative weakness, heavy selling pressure, tried to bounce, tried to get above the 100-day moving average. Here we are right below it and making a new relative low. Let's go into the 5-minute chart. Let's see what it has been able to do. Market flat. It's trying to get off of its low right here. Facebook looks like a decent short to me. I believe that that 100-day moving average is going to be intact right in here. If we get continued follow through selling in the market, Facebook is going to participate on the downside. Going to go into Adobe. That is a nasty looking chart. Big gaps in here that still need to be filled. Here's what I would do with Adobe. I don't know that I would short it right here, right now, because this move has been so accelerated. Any type of bounce, any type of check on that 100-day moving average, you want to see it not be able to get through, and that would be a good shorting opportunity for you. So Adobe also looks very, very weak, heavy selling right in here. And I can take a look at a few other stocks. We can go through the list right now. I'm going to go into more of a swing search. We'll go into Pop Bear and see what's on there. Yowzer, we got a lot of stocks in there. So I'm just going to look at stocks that have good option liquidity. NET, broken upward sloping trend line here through the 50-day moving average. Plenty of room to the 100-day moving average. So that looks good. Pretty interesting. You also see SPY in here. Going to look at Pfizer. It's on the 100-day moving average. I wouldn't short that. We've got Walmart actually poking below the 200-day moving average today. That was a horizontal support level also. Walmart looks pretty dang weak to me as well. Let's put up that 5-minute chart. You can see it's steadily drifting lower in here, not able to find support. I still don't like it as much as I like some of the other shorts. So the ones that I would stick with. I like Facebook as a short, and I think Adobe works well also, but I'd be a little bit cautious with Adobe from a swing trading standpoint just because it has a chance to bounce. It's had so many gaps down. I'd be more interested in trying to catch a short off of a bounce. So I would click this low of the day right here. I would click that, have my upward sloping trend line. If it's violated to the downside, I'm going to be looking for weakness in the overall market. If that's breached, then I feel that Adobe will be a good short, and I'm also going to put up my 1OSI indicator for all the stocks that I might be shorting today. Need to have that orange line below zero. If I've got that, then I've got all the ingredients for a decent trade. We'll do the same for Facebook. You can see it popped up above zero, and now it's starting to cross back over. I'd use the same type of upward sloping trend line on Facebook. So I'm going to click alert. I'm going to click that candle there. Click the bottom of that candle there. You can see it touches in there. So now I know when Facebook should be on my radar. That's how we trade. Relative weakness is what you want to be looking for. I believe we're going to see sustained selling in the market, especially if we take out that 100-day moving average with ease today. What do you mean? So just to reiterate, if we bounce, 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 bounce all day, we get a bullish hammer off that 100-day moving average with a close near the high of the day, that is not the type of move that I want to see as a bearish trader. That, in fact, would suggest that we're probably more likely to see a double bottom higher low and perhaps some strength into year end. You'd still want to wait a few days to make sure that that's the case, but that would be a bullish event, not a bearish event. What would be a bearish event? A bearish event is a long red candle closing on its low, closing below the 100-day moving average. Tomorrow, Wednesday, doji, all of those losses preserved. Thursday, red candle, clearly below the 100-day moving average. That would be the type of bearish candle where you can continue to get short with the expectation that we're going to continue to probe for support. Also watch the TLT. Make sure that's continuing to be below those major moving averages. That would only strengthen your case. So make sure that you've also got that chart up and that you're watching that as well. Thanks for watching. Good luck with your trading. Got a little bit of a rough patch right now. You know I've been looking for this for the last couple of months. That's why I've been staying on the sidelines as far as my bullish swing trades. We needed to have a big market washout. Swing traders, I think that we're going to have a nice opportunity to get long probably in the next 3 or 4 weeks, but we need to make sure that support is established once we have it. We're going to have confidence to take those longer term bullish swing trades. Asset managers will have confidence to come back in, and we should see a nice little year-end push. Thanks for watching. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.